Brad Jacobs, who's the executive chairman of XPO, is a career CEO and serial entrepreneur with an amazing track record for shareholders. He's founded 7 companies, including 5 multi-billion-dollar public corporations, and delivered tens of billions of dollars of stock appreciation for those stockholders. He's currently managing partner of Jacobs Private Equity, executive chairman of XPO, which he founded in 2011. By the way, XPO's stock, if you invested at its inception in 2011, you made, check this out, 32 times your money by 2022. It was the 7th best performing stock of the last decade. United Rentals, another huge success story. That one you would have earned 100 times your money. So again, this is why sticking around and listening to Brad Jacobs is important. Over his career, he's led teams that completed about 500 acquisitions and opened 250 greenfield locations, created hundreds of thousands of jobs, and raised $30 billion of debt and equity capital, including 3 IPOs. And to help dig into the secrets of how to make all that happen is Brooke Masters, the U.S. financial editor of the Financial Times. Gentlemen? And lady.
Hi, everybody. Thanks so much for having us. Brad. There are very few CEOs who can claim the kind of broad-based record of success that you've had in good times and bad. And I think let's start with a really basic question for many of the people in the audience. When you look around and think about starting a business or buying another business, what are the sort of 3 principles you take? Quick lesson, like how do I decide whether this is worth doing?
When I buy a company.
When you buy a company.
When I buy a company, first of all, is there a real good reason to buy it in the first place? You can't just do M&A for the sake of M&A. So I look at lots and lots of deals simultaneously. That's my MO. So at XPO Logistics, we looked at 2,000 possibilities. We bought 18. So very selective. Is there a compelling strategic rationale for it? Is there something that it brings to the table we don't have? Is there some fantastic synergy to it? Is there some tech angle to it? Although usually our tech is better than the other guy's tech, but still, once in a while we've got some good tech. So that's the first thing. Second thing is, what are the people like? Is there real talent here? Are there human resources that are spectacular, that are off the charts, that are really, really talented, that can up the vibe of the party? Third thing I look at is being extremely disciplined, regardless how great the deal is and how wonderful it is. Is it a price that works? Because people say, oh, you forget the price. Your balance sheet doesn't forget the price. Your balance sheet remembers the price forever. That's the IC in ROIC. So I look at price. I look at price very, very, very rational, disciplined, unemotional way.
We're in an environment that many businessmen have not seen in
business persons.
Business persons, of course.
Oh, in this crowd, it's a little more businessmen, but that'll change over time.
It's better than it was last year, actually. With higher interest rates, which changed the calculation on price and on investment. As you look forward, does your strategy change at all now that the sort of base interest rate, as Ray Dalio just pointed out, is likely to be higher for longer?
Absolutely. So it goes back to the third thing I mentioned about price, valuation. If interest rates are higher, and they are, there's no more free money, there's no more global synchronized growth, you have to be more disciplined on price. Otherwise, you're going to buy a bunch of stuff and you're not going to create alpha. You're just going to become bigger, but you're not going to become more valuable. So yeah, if your cost of capital, so you have to look at your cost of capital, your equity, your debt, and you have to look at what you're deploying that to. If you're a CEO, you only manage 2 things. You manage time of the organization, get people to focus on what are the strategic things we want to be focusing on, and keep people disciplined on that, and capital, deploying capital on the most intelligent ways where how much money are we going to get back, when are we going to get all our money back, and how long is that stream going to continue over time? So if the cost of capital has gone up, you can't pay as high a price. You won't create value otherwise.
So how does that affect now as you go out and look for your next business?
I think it's going to be tougher. I think we'll still outperform the market. I believe we'll do that because we have a formula, we have tools that we use, and they're repeatable in different parts of the market. But I don't know that it's reasonable to expect we're going to make 32 times their money on the next deal, or 100 something times their money like United Rentals. But and the reason I say that is, and this is going to affect everyone in this room, the trillions and trillions of dollars of AUM that has to be implemented, is you don't have global synchronized growth, where just for showing up, it's going to keep growing. You have higher interest rates. You have a lot of geopolitical noise going on. So it's not quite as easy. Having said that, in every part of the cycle, you can make money. If you apply certain techniques and certain tools with discipline, you can outdo the market.
So tell us 3 secrets, 3 of those techniques.
So you've read the book.
I have read
the advanced.
Brad is working on a book. It's coming out in January. It's like how to make billions of dollars.
Something like that, yeah. So the first chapter is a very controversial chapter because, and you liked it, which is great. Some people hated it who read it. Only reporters have read it so far because it has, on its surface, nothing to do with business, but on the depth, everything to do with business. And that is, how do you think differently? How do you get out of thinking the same old way? Because if you think the same old way, you're going to not create any alpha. You're going to be just right at the mean. You might even destroy value. So I put a lot of techniques in the book that I've used over the years of thought experiments and meditations and different ways, and cognitive therapy, and just different things that have worked for me, some of which will work for others and some of which won't, but I just put it all out there on the line. So some people have really related to that, and particularly the appendix that has very specific guided meditation, so to speak, thought experiments of how to think in huge arcs of time. Maybe not as big of arcs of time as Ray, but in some ways more cosmic, but those long thinking, and Ray's a really good example of that. When you look at the people who have made lots and lots of money, very different people, different backgrounds, different approaches, everything different about them. But there's one thing that's identical about every single one of them, at least people I've met. They think, as Steve Jobs said, differently. They think just in a different way. I mean, I was listening to Ray, and he just thinks differently. I mean, he thinks in a 500-year cycles. He just thinks in a very, very macro way. So I think it's really, really important that you hire people who think differently. So the people, it goes back to the people always. I've been very careful about who I've hired, and we keep a position open sometimes for 2 years until we find that perfect person, because we want that person forever. And that person has to have certain qualities. And I talk about that in the book at length. But I need people who are really all in, people who are hungry, who have fire in their belly, who have something to prove, who on the work-life balance really enjoy work as much as life. It's not, oh, I got to work, and then I'll go do my life thing, which I really enjoy. It's like, I really like working. I really enjoy working. So I want people who have that too. I want people who are really intelligent, people who are really, really smart. I find that IQ is very important for senior management teams. The top several dozen people in my companies, 2/3 of them had IQs higher than mine, and sometimes significantly higher than mine. And I want that. I want people, and then you have to have an atmosphere in a company that encourages respectful disagreement. But disagreement. You don't want a company of yes people. You want people where the imperial CEO has like Moses coming down from the mountain and has all the answers, and everybody else says, yeah, right. That's a terrible culture. You'll never accomplish great stuff on that. You just have a megalomaniac CEO, but you won't create a lot of value for your shareholders, which is what it's all about. What it's all about. So those are the kind of things I talk about in the book.
Let's, for most of your companies, you have tended to spot an area in the market where you can use technology to bring efficiencies and revitalize the market. Obviously, everybody's talking about large language models and generative AI. Do you see an opportunity in that?
Always. In generative AI specifically?
Yeah, or with technology right now, where do you see the spot?
It's the biggest trend out there. And so in the book, I do a 2 million year history of inventions of technology, starting with cavemen using pebbles for tools, and then fire, and then here you got in the last 20 years, like a huge acceleration of all kinds of stuff. And the biggest one of all is AI, of course, because you have technology, which is the tool we've created, getting smarter than the inventor of the tool. So that's a fantastic concept there. In every business I've done, we've been huge users of technology. We've been ahead of the curve. When I started XPO, I told all our investors, and they're mostly the same investors I had in United Rentals, I said, look, don't bug me about earnings for 2 years. I said, well, why? Because I'm going to spend a fortune on technology, and I'm going to create a huge infrastructure to staff up so that when I do all these acquisitions and bring in all this revenue, I don't blow up. I'm going to have a big competitive advantage by having a backbone, a nervous system of an organization that can integrate and optimize quickly without bumps. So that's important to have. And you look at technology in the three companies, XPO, GXO, RXO, they're all tech-driven. They're all tech-forward companies. In GXO, you have increasingly all automated warehouses. You go in and it's like, where are all the people? It's like this huge, huge warehouse, and there's 10 people there. And it's working very efficiently, and it's robots and automatic technology. You look at RXO. RXO is increasingly a digital marketplace. We started RXO in what's now called RXO, the truck brokerage division of XPO, 2011. There was 0%, nothing at all done electronically, just like the whole industry. Today, 96% is done electronically. So it's really been completely automated. And you look at XPO too. XPO on the LTL is increasingly automated. They're using the workforce planning analytics, using the automatic forklifts. It's all tech. It's all tech.
So is your next business also going to be all tech?
It's not going to be a tech company because I don't understand tech valuations. It's not my thing. I look at multiples of cash flow. I don't look at multiples of revenue and future bets. I don't like to do things that have big range of potential outcomes. I look for things that I totally understand, and I look at the cash flow it's going to generate, and I present value that, and there's a big discrepancy between the amount of cash we're going to make and the cash we invest in the business right now. Very, very simple, old-fashioned investor in that respect. So tech is not my thing. Tech is more making bets, and there's a big range of outcomes on that. But I'm definitely going to use tech, as I have in all my companies, to turbocharge the company and to have a big leg up off the competition, to find productivity, to find cost effectiveness, to be able to share information throughout the company rapidly, transparently, comprehensively. That's a big part of creating a fantastic company, is making sure everybody knows what's going on.
There's a lot of debate about whether going public and public markets are less attractive than they once were. You've obviously done companies in private, you've gone public, you've done both. As you look forward from now on, do you think that you want to be in private markets or you want to be in public markets?
100% I want to be in public markets. I like the pressure of public markets. I like the fact you get all this free advice from your critics. I mean, all day long you have people throwing stones at you and telling you how stupid you are and how wrong you are and mistakes you're making. You ought to do this, you do this. I listen to all that stuff. And we listen to it all, and you know, some of it's really good information. I don't have to pay tens of millions of dollars to a management consultant. So I like the I do like the information flow a lot. I like the fact it keeps you real. When you're private, you can kind of live in your own story. But when you're public, people are bringing you down to earth like every single day. You develop a thick skin on that. It's good. I like the access to capital. It's cheaper capital. Going back to what I said before, one of the main ways you create alpha is accessing capital and deploying that on accretive terms. So public markets have the cheapest cost of capital. So I'll definitely be in the public markets.
Okay, sounds good.
Sooner than you may think.
We're looking forward to it. One of the other big trends right now is obviously sustainability and going green. Do you have views on how to lever that into making a business more effective and efficient and profitable?
Whole big, huge subject. And that answer is very different in Europe than it is here. In Europe, you go into meetings with investors, and it's a 45-minute meeting, and you're halfway through, and they're giving you a lecture about green, and it's like, we're going to talk about the business here? Because we didn't talk about the business yet. And you know, it's just, in the United States, it's not quite as a forefront. It probably was a couple years ago, but I know this proxy season, we've been doing pre-meetings with the governance people at our shareholders at all of the three companies, and nobody's asking about that anymore, which is, I don't know if that's good or bad, but it's a fact that it's not as top of mind as it was. Now, more specifically to your question, there's a lot of businesses that are making money and have business plans that could make a lot of money, but it's based on government handouts. I don't like to do that. I've been burned in the past on that.
Give us an example, actually.
Well, I wrote about that in the book.
I know, but they haven't got the book. You tell them about it.
Good point. So the book goes over the stupidest things I've done in the last 44 years, and what did I learn from those? And then it says, okay, but we did do a lot of stupid stuff, but we did make tens and tens of billions of dollars for shareholders. So we did something right. And then I just had to reflect on it. I said, so what is it? Because when you're doing it all, you don't have time to gaze on your navel. You're in it. You're just in it. You're doing stuff. So I had to reflect on that. So what are the things that we did proprietarily, that we did differently, unique, idiosyncratic to us, that enabled us to outdo the competition so dramatically and have all the results that they kindly said in the introduction. And I go over that one by one throughout the whole book.
So tell us about the government subsidy.
Okay,
one.
so the stupid.
Quickly.
So when someone says to me, which they often do, well, okay, I like the fact that you admit you did stupid stuff. I said, it's really easy to admit. I've made thousands and thousands of decisions, even if a few percent of those are stupid. I've made some whoppers. One of the biggest one that I always think, and I talk about it in the book, is I naively believed the government back in like 1999 or so, 1998, 1999, when there was this act called the Transportation Equity Act for the 21st Century. I don't know if you remember this one. And the government was supposed to spend huge amounts of money to repair the bridges and the tunnels and the infrastructure in the United States. I said, well, that's sure they need that. Anyone who drives back from Greenwich to New York knows it's a rocket going up and down. It's quite bad. And I said, okay, that makes sense. They're going to spend all that money. I got to get positioned to get some of that money. So we went out and we bought barricade companies, we had coning companies, all the stuff that's orange on the highways and everything that rented that equipment. And then we waited for the money to be spent. They never spent the money.
They just promised it.
They spent this little tiny bit of that. And of course, I went out and I paid up for those companies, and I ended up reselling them to Winchurch for a $500 million loss. So I lost $500 million. So that's something you don't forget for the rest of your life.
So
you're on your
not,
deathbed and you're thinking about, gee, I lost $500 million. Like not a lot of people can say that. But,
so you're not lining up to take money from the Inflation
no,
Recovery Act.
I don't. So I was at the Jefferies Industrials Conference a couple weeks, really good conference. One thing that I went away with is I saw about 16 or 17 presentations. Half of them had a slide or two up about how much money they're going to get from the Inflation Reduction Act or
the CHIPS Act.
The CHIPS Act, the Bipartisan Infrastructure Act, all these acts, the CARES Act. I thought that was done like 2 years ago. And it's big money. So that really hit me that, wow, I figured don't fight the Fed, raising rates. But you got these like two opposite things going on. You got the Fed tightening and making things, and then you have all these trillions of dollars coming into all these companies. So I don't know whether inflation or recession. Those who are old enough will remember when you have old stereos and you had like a treble button and you had a dial, you had a bass button. Remember that?
And you dial them both up, it doesn't do anything.
And you do it all up, like you don't hear anything in the middle. But that's what's going on here. You have the Fed doing one thing, tightening, so maybe I'll make that the base, all the way up to 10. And then you have the government just giving this money, investing this money in solar panels and all kinds of stuff like that. So I don't know where we're going on that. It's really a dramatic fight that's happening.
So it sounds like you are not lining up to make solar panels or wind turbines or whatever.
I don't want to do any business that depends on the government giving me money, and I don't want to depend on any business. I don't want to do any business that depends on the government or insurance companies telling me what price I can set for my services.
Now,
a lot of things I don't want to do.
A lot of things you don't want to do. And obviously you're not telling us what you are going to do because then we'd get ahead of you and do it for you.
I want to sell books first.
All right. I want you to share another secret from your book and actually tell people, don't just tell them to buy the book because they can't get it till January, which is you were talking about how you want to have companies that have proper discussion and proper disagreement.
Oh, yeah.
And one of the ways you do that is by running, I think, what you call electric meetings.
Yeah.
How do you run an electric meeting? I don't know about you, but I hate meetings. So how do you make your meetings better?
So thank you for that question. There's a whole chapter in the book called How to Run an Electric Meeting, because I spoke a few minutes ago about, so I reflected on what did we do differently than every other company out there, 1,000 companies. One of the things is our meetings are completely different than meetings in most companies. There's no PowerPoint presentation. That's set ahead as a pre-read. There's no one person giving a lecture to everybody else. Everybody's involved. And everybody sets the agenda democratically, which means...
Explain that one. Like, I don't understand how you can have a democratic agenda.
So we have our way of doing meetings. We send out the materials, the pre-read. People are expected to read those. Then people are required to send in two things. Their biggest takeaways from what they read and what they're doing in the business. And secondly, what are the most important questions that is worth everyone in the room who's going to be at that meeting answering? And then they're ranked. So the app comes in, and then that's the agenda. I don't set the agenda. I vote, and I
So 10 junior analysts decide they want to talk about peanut butter jelly sandwiches. You would talk about peanut butter jelly sandwiches?
That never happens. What happens is people take it real seriously because now they're empowered. Now they're included. Now, gee whiz, I'm setting the agenda. And people want to get stuff off. People say, I want to talk about this. This is really, really important. So they phrase the topic real clearly, and then people vote on it. And then we make everybody shut off all their devices, like no exceptions. No devices at all. And every single person in that room has to stare at the person speaking and give them more than 100% of their attention. Their eyes and their ears have to be completely on that person and tune out the whole rest of the universe, which is a thrilling experience it's a very validating experience for the person talking, and also creates a big bonding experience for the whole room. And more importantly, it gets us to really think. It gets us to really think about what's important. And as you mentioned, we encourage people to disagree. It's not like, it's okay to disagree, but don't really disagree. No. We absolutely want people to disagree. We want people to respectfully disagree. You're not going to insult someone or label someone or bully people. That's totally not going to happen at all. But we're going to debate ideas. We're going to attack ideas. We're going to think dialectically. We're going to think the pros and cons of everybody's ideas. And that's how you get the magic. That's how you come up with solutions and activities and work streams that you wouldn't have come up if someone was just up there with some boring PowerPoint and everyone's on their phones and snoring.
So after they voted to create the questions, you have the debate. Is there like a vote at the end of the meeting also, like what's the answer? Or
there's action points.
Yeah.
Absolutely, there's action points. If you have a meeting and just had a great meeting, but like doesn't turn into like work streams, well, that's not good. And we workflow all our projects, so we hold people accountable, and we do it very simple ways. We have the KPIs, and not a lot of them, a few dozen of them. Financial KPIs, operational KPIs, customer KPIs, employee satisfaction KPIs, and we just measure them very objectively, and then we share that information with large numbers of people. Much larger percentages of the companies see information at the companies I've started than at a typical company, and I love that. Particularly, we share the problems. We share the things we're falling down on. We share the things that we're messing up. We're sharing the things that aren't going right. And then everyone rallies, and we have internal social media, and the larger group gets involved, and it's quite exciting.
So who has to write that we are screwing up on this? Do you write that, or does the person who's screwing it up have to write it?
If we do it correctly, everyone not only feels free to write that, but wants to write that, because that's how you get better. That's how you create a fantastic company, that people are self-aware. It's kind of like a body, like a human body. If you're not going to an exam and figuring out what's going on in your body, you may end up just randomly finding out you have stage 4 cancer. And like that in a business physiology, you want to be finding out what's going on. You want to be very close in touch with the metabolism of the organization. So everyone is encouraged that. And now when we send out surveys to our employees, and we ask them to rate their employee satisfaction from a scale of 1 to 10, and if it's not a 10, what would make it a 10? We also ask sometimes one, sometimes two questions between the following two questions. What's the thing that we're doing the best that we should definitely not change because we're doing it really, really well? And the other question, which is, I would say more importantly, is what's the stupidest thing we're doing in the company that we need to fix? And when you send that out to tens of thousands of employees, who in most companies are never asked anything remotely like that, it empowers them, and more importantly, we get all this information. You start seeing themes, and you apply tech, you apply the word clouds, and they do the searches, and the tech guys tune this into all kinds of charts, and then you realize what's really going on in the company. Like you went to an exam, a health exam for your body. You have a health exam for the whole company.
Now, empowering the employees sounds brilliant, and I like the idea of the word clouds and things. How do you translate that into paying people? Because that's got to be an important part of it as well.
I think you should always overpay people. And what I mean by that is you should find extraordinary talent, off the charts talent, and you should pay them really well. And then you've got, and look, people have worked at my companies. There must be over 1,000 people that became millionaires. There's people who made tens of millions. There's one person made over 100 million. So I like that. That's a beautiful thing. The only way they've made that money, the only way, is because their compensation was tied to results, going back to the KPIs, and they overachieved. And so they deserve that money. So sharing the wealth with the people actually creating the wealth, it's really important. And not just to a few people. It should be spread out, large numbers of people.
When large numbers, like what, does everybody get a bonus?
Everybody should be, everyone in the company ideally should be well above the 50th percentile in total compensation. It's nice to keep the guaranteed compensation lower than the 50 percentile, but with the incentive compensation, when there's good years, they can make way, way up on the chart.
Well, I see that our little light is starting to blink at us. So, Brad, I have to say, you sound like a fun guy to work for.
Well, you're looking for a job. We have openings. We have openings in
Start a
communications.
newspaper. I'll join. Thank you very much. Brad Jacobs, everybody. Really appreciate it.
Thank you. Thanks, Bob. I appreciate it.